So welcome to RANsquawk's morning briefing for Tuesday the 26th of January 2010. Taking a look around the markets, first of all starting with the Asian session where we saw the Asian bourses across the board on the back foot. The Shanghai Composite closed down 2.4% and Nikkei down around 1.75% lower for the session. In China in particular was where much of the fears surfaced. That was as the reserve requirement ratios was actually implemented today, having been announced back on the 19th of this month. That again reigniting some of the jitters around policy tightening in China, and the banking stocks in the Shanghai Composite led the index lower, but again that was down 2.4%. They did see a stellar uptick as well in terms of T-notes, which followed JGB's higher overnight. T-notes were up around 12 ticks or so at the European Open. Also buoying the prices there was some commentary from Obama overnight, where he said they were under pressure from deficit hawks that will seek a 3-year freeze on domestic spending in his 2011 budget that would save some $250 billion by 2020, according to administrative officials. Also, as well, adding to a bit of a safe haven tone for that uptick in T-notes into the Open was Standard & Poor's. They've cut the outlook on Japan to negative from stable. That also contributed to some sharp weakening in the yen on that announcement. In terms of other things that we have seen, much has been based around economic data today from the UK markets. The anticipation was very much on the Q4 advanced GDP print, which came in lower than the consensus by quite a margin. Although the UK has now officially turned out of recession, growth then for Q4 was at 0.1%, below the expected 0.4%, and cable, an immediate reaction, we are down around 100 pips there, having gained in advance of that figure yesterday. Gilt futures as well, they did spike higher, and we are trading higher around 20 ticks or so, as well as dragging Bund futures higher. Also, following the 5-year syndication from Greece yesterday, attention now turns to Greece in terms of 10-year, which they'll look to conduct at the beginning of February. Concerns over that resurfacing as the spread between the 10-year Greek and German Bund yield spread has widened yet again, and also helped support some of the Bund prices this morning. In terms of Germany, the IFO data largely brushed aside. That did come out slightly better than expected, and it did at the time give the euro a bit of a lift. But attention will turn to the US data today, having had quite a quiet session yesterday. The main release will be consumer confidence overdue at 3 London, 9 in Chicago, where analysts are expecting a minor improvement on the headline print today, to come in at 53.5 against the previous 52.9. Other data points will be the house price index, alongside the Richmond Fed manufacturing index, and also the Congressional Budget Office will look to outline their 2010 economic outlook. For energy listeners, will have the API numbers after NYMEX pit close, and in fixed income we'll have a reverse auction today from the Bank of England, coming obviously very close now to the end of that current 200 billion QE programme. They're looking to buy back 2036 to 2060 maturities, and we'll also have $44 billion worth in a 2-year note auction at 6 London, so that's midday in Chicago.